Yeah, thank you. So, with the lending industry, we believe that account aggregator framework is at a stage where there is an understanding. Of course, there is receptiveness to adoption. To an extent, there is also active adoption, and there is now active thinking on how more and more processes can be eased out with this, consented data framework. And we've had some very interesting discussions around use cases that could come out in the future as well. On that note, I would like to start this particular session. As we know, account aggregator is at a cusp of now exponential growth. We are at 170 million successful consents that have got delivered across more than 600 FIUs. We are at more than 140 million accounts that have got linked. So basically, we can safely assume about 80% of this are newer accounts, 80 to 85%. So they have got linked to share data. A month on month increase in adoption, we see at about 12%. So, and a lot of y'all who are attending this session are also contributors to these successful numbers. So, thank you very much. Without taking any more time, I would like to introduce to all of y'all our esteemed guest for this session, Mr. Anubhav Agarwal. Anubhav, of course, I have interacted in my capacity with him when he was in his earlier organization. But of course, if I go through his extremely rich background, I have to say he comes with a lot of experience in the financial sector, specific to digital lending and, of course, also wealth management. Because my experience, as all of you all know, I manage the wealth side of Account Aggregator. So my experience with Anubhav has been in that capacity. He has, rich experience of around 16 years. And when I went through his profile, I also realized that he has done and is doing some interesting things on gamification of I believe it's digital financial products, or I don't know. I'll have to ask him that directly someday. But I see he is also volunteering to learn some new kind of technology, and he's also done some work on gamification. So, and right now he's with Stashfin, and therefore it is, he is a very right fitment to kind of have a discussion on collections and risk mitigation that we are trying to, address over here. I would also like to get on stage my colleague Abhishek Varshney. He is senior partnerships lead for the RBI entities, and he manages all the lenders and the banks on our ecosystem. So, Abhishek, if you could put on your video. The next 20 minutes is going to be a discussion between Abhishek and Anubhav around certain questions that Abhishek has in mind, has crafted keeping in mind the topic of discussion today, and has gathered over his various discussions that he has with the industry. Post which we will have about 10 minutes of Q&A with Anubhav if anybody wishes to ask any questions. After which, at about 4 to 5 p.m., we would like to start off with our first presentation by Finarkein Analytics, followed by the next presentation by Ignosis. So over to you, Abhishek and Anubhav. I'm going to be hiding myself now.
And thank you.
So,
Thank you.
thank you, Ruchi. So I think as Ruchi mentioned, this is a time where everyone is looking out like what next when I'm on visit in Bangalore, and I've been meeting for last 2 days with several lenders. And when initially we just a year back when I used to meet lenders, I used to see that they have experimented on majorly on underwriting, and they have started using bank statement. But now during this time when we are interacting, really a good picture wherein at least we are seeing that A has become a preferred way of data sharing for everyone. We are seeing on an average the coverage of A is around 60 to 70% of the users they are able to get through account aggregator. And also now why this webinar and topic we chose was because everybody is now looking at underwriting is kind of people have experimented, and now what next on what call can be done on risk management and collection use cases, recovery, how account aggregator is solving. And this was a keen interest from the industry, and hence we thought, why don't we have a small fireside chat with some of the practitioners who have actually implemented these use cases. And obviously, I understand right now everybody is building the workflows and have done some bit of usage. So, but we like to have Anubhav to actually spend some time on these aspects and give us more clarity on how these use cases have impacted. But overall, if you see, we see clear trend of increasing usage of account aggregator. Now, if you have seen our lending report, I think H1 numbers was just doubled. We do this survey every 6 months, and we have realized that the number shows that the every time that when we go out for the survey, the number is just double the next last half yearly. And we will be soon rolling out our next survey for this for the H2 FY25, and we request everyone to actually participate because this really help us to see the impact of account aggregator. I'll not much take much of the time. We have Anubhav to speak a lot. And Anubhav, I will start with like how has been your journey, and you come from a you also have a unique profile since you have done a lot of well tech side also and seen high touch products on RIA side. We like to know how is your current experience with account aggregator on lending? What are the use cases? How you initially started? What is the coverage you are looking at? I think these are certain questions of interest for everyone. Yeah, over to you, Anubhav.
Thank you, Ruchi. Thank you, Abhishek, for having me here. I'm glad and excited. I think the my journey with account aggregator goes back maybe pre-COVID when I attended probably the first workshop that Mahesh kind of organized in Delhi in one of the lender's office, and I was like fascinated with the idea, the concept of how the open banking is kind of getting transformed and getting getting advocated and getting kind of built out around that time. This was, I would say, 2019, 2020. And since then, I would like honestly say, like as Abhishek is saying, it has come a long way in terms of the impact that is actually now clearly visible. And not just in lending, actually, on the wealth tech side also, in terms of RIA and the investment advisory, PFM aspect. So I think like overall from so I had a good opportunity looking at the personal finance and how we can actually use the account aggregator data, pull that and create insights for customers on enabling them in managing the cash flows, giving them right alerts, giving them better tracking, and also on the digital lending side, which has significant help in terms of financial inclusion and availability of credit for the end users and the end customers, right? So right now I'm heading the product and technology at Stashfin, and yes, here because we are an NBFC, we are a registered NBFC. I think account aggregator seems to be the pivotal way that we are actually adding more and more to our experiments and our journeys in terms of enhancing availability of credit to our customers. So that is where we are. I think we started account aggregator probably a little later from rest of the industry. I don't know where a lot of people are, but from the industry trend, I say that we started using account aggregator as Stashfin around an year back approximately, and because the team, like once you actually start accessing this data, earlier it used to be by the PDF net banking in a different way and format, but once you actually start getting this new dimension and new asset class available for your underwriting purposes, that actually increases the scope and like the how you can actually do better underwriting and make more limits and make more users available to give them a loan.
So Anubhav, like if you go more deeper into on the risk management side,
Yes.
like how do you see how it is impacting you, maybe at a scale, and how do you see it evolving in coming times? If you
Yeah.
can just give a brief
Yeah,
idea
yeah,
of
yeah.
your
Sure,
experience
sure.
on the lending side.
Yes. So Overall, I think so within Stashfin and overall as part of the industry, I think what is happening is that like across the spectrum, I would say, like there are lenders are of different comes in different shape and form, right? There will be two-wheeler lenders, there will be business loan segment, there will be personal loans, and there will be STPL, short-term personal loan. And what has happened overall is that with account aggregator, like earlier, like few years back, primarily the underwriting used to be driven based on income surrogates or like availability of bureau data. But with this information now also coming into picture, uh, and like across the spectrum, like the biggest pain point of every lender is to actually ensure that you have a higher approval rate and contain the bad rate at the same time, right? So that is the balancing dimensions that you need to actually do. And wherever like the companies lenders have tried out banking based underwriting, and now there has been experimentation. I think every lender has actually gone through that process of experimenting, uh, moving to account aggregator, but then still using some bit of manual underwriting, and then moving more and more of automation, then rule based, and then gradually advancing to a banking model based products as well. So, and I'm sure everyone here is going to be at a different journey. So we are, and but the end goal outcome remains at approval rate, and while containing at while reducing our bad rate. What we have seen is generally, if we kind of maintain the same bad rate, the approval rates have actually doubled uh, after using the account aggregator data, which is a significant factor in terms of the end disbursement that we actually make on the same customer base that we actually use to kind of onboard on the platform. So double in terms of the volume, and approximately translates into similar dispersal value.
So Anubhav, you're saying that using account aggregator data, I think when you talk about in unsecured lending, majorly many of the companies were relying on alternate data and your different surrogates to mobile data, etc.
Yes.
I so what interact during our interaction we have felt that now because account aggregator brings that digital power, and it is so seamless that people all the lenders started taking banking during their main journey as well. Initially, it used to be for the customers who were dropping out, or maybe through alternate data, you're not able to give them some eligibility. Then you used to direct them to banking,
Yes.
asking them to submit the banking. Now, clearly, many of the lenders have started in their main journey, the integrated account agreement. They also take it, and while you evaluate the customer basis your banking data, you have seen the numbers getting doubled is what you are saying, right?
We have
Disbursement number or the number of loans is getting doubled. Is
the
that
approval
correct?
rate. Yes, the approval rate of the STP loans completely. So now, so earlier STP used to be only bureau-led STP. Now, even because the journeys are actually so seamless, there are I see there are presentations from some partners here, and we actually use one of them. And what I have generally seen is that uh, earlier the STP journey used to be only bureau led, but now the STP journeys and the banking used to be would become a non-STP journey. So now the non even with account aggregator, the whole process of STP includes banking, and then so the customer experience remains intact. The customer, you are actually able to offer and disburse in within few minutes, while you actually contain the approval rate. So the operational efficiency actually comes in, and you also are able to improve your approval rate while ensuring the same bad rate. Or you can also do the same thing. You can reduce the bad rate significantly and maintain the same approval rate. So both the factors are actually helping you in terms of operational efficiency while you are actually getting a better approval rates.
Okay. So Anubhav, any thoughts on specific use case of account aggregator when you talk about identifying frauds, or do you see any signals coming from the banking which gives you a glimpse of maybe this customers uh, can be have some fraudulent activity while identifying in the banking transactions, or maybe some other data from a
So what I have generally realized and have seen this like practically is that when we used to leverage alternate data, the challenges, like I'll talk about fraud also, but the challenges with alternate data is that first of all it is point in time. You do not really get to know at the date of underwriting. Maybe you have that assessment, but how thick the data is, you are not really sure how thick the data is unless you are actually having access to the base data also, or you are one of the companies who have like access of a lot of payment data. Only then you are actually able to understand whether the data is really thick or not. So you have some alternate data, mobile data or SMS data. Now these things are actually on the gray side also. Now account aggregator is a very fully regulated product, so that gives us comfort. That gives us, I'm sure industry is also comforted by that factor, that yes, this is a verified product. It is coming directly from the source, so there's no chance of fraud or any gaps or anything kind of getting missed. So that is that is the beauty of account aggregator, and that is the reason probably it has actually grown so exponentially, and you are seeing that exponential growth every 6 months, what you mentioned right now as well. So that is, I would say, the most important thing in fraud. I think I would say what has kind of helped us is that with in the processes earlier, when account aggregator was not used to be there, a PDF or a bank statement used to be the model of kind of getting your bank statements shared. And it was also human led. There was some bit of assistance often, and because the whole process used to be through a statement based process, there were chances, and there was a certain percentage, single digit maybe, but there was a percentage of fraud that was kind of really identified. With AI now actually happening, there's much more easier way of actually making a fraud bank statement or modifying some certain numbers, and that is something that gets eliminated. So that is something that has been seen and is now eliminated through this process.
Yeah, I think similar case studies we have also got from many lenders when they talk about increase in revenue or the disbursement amount, which you talked about here as well. So, Anubhav, so I just want to understand what kind of category of customer does Stashwin caters to, and do you see more loan towards NTC going maybe enabled through account aggregator or through maybe on gender diversity? Do you see women-led loans are becoming easier for them?
Like I would say across the population, not very specific to any specific gender or a particular segment of population, but what I have seen overall is that we NTC as a segment. So, for example, Stashwin has, as part of the risk policy, we had not been giving. We were actually focusing 100% of our dispersals on existing to credit, right? Now, recently, like in the last few months, we have started experimenting on a bureau no hit or a NTC kind of a base as well. And this is a something, because whenever you do a new experiment, you have to take some time and like figure out how the portfolio kind of performs 3 months, 6 months down the line to actually increase the experiment volumes in that. So we have started experiment on accepting NTC swap in if the banking information is kind of thick and we are able to assess. So I think FOIR is something that is RBI has actually also been very vocal about identifying or lending based on a FOIR, so fixed obligation to income. Now banking is a very clean and verified source of the FOIR as an information. So, and you also get recency of that information, right? So all the information is as of today when you are actually pulling that information. So, so basis this information, we have actually seen disbursements happening to NTC customers that we were, as part of policy, were not able to do, and we were not able to do because we knew that this would have actually increased our bad rate, but now we are actually able to do, and that's the reason I'm saying that availability of credit would increase to that population. Our customer base is mostly young working population. That could be more tier 1, tier 2, tier 3 also. But what I have generally seen is that 70% approximately is salaried. but tier 2 salaried could be a person working at a shop as well. So tier 2 or tier 3 salaried is a person working at a shop who gets his salary from his business employees. It's not a corporate salary, but it could be any shop salaried guy also.
Okay. And so moving on towards post-disbursement monitoring and collection, what are the use cases, Anubhav, you are doing currently, and how do you see new use cases which you are thinking like will like to know more about? How are you planning evolution of account aggregator and the whole lending life cycle?
Yeah. Firstly, we experimented largely. I think majority was we were starting to focus on the underwriting bit of it. In the last 6 months, we have actually started looking at the portfolio. We have started taking in the consent on the monitoring as well. And what we have kind of started doing and started seeing some results. I'll tell you a few use cases. So I think first is representation. Representation, when the customer kind of does a bounce, you get to know that yes, the customer really has or the customer does not have the funds, and you can actually do a representation when the customer has funds. So that is something that has helped collections. It helps in the recovery, and that has like helped in a meaningful way in terms of business impact. So representation in terms of portfolio monitoring, that really helps. We have also been able to actually on a from a customer's point of view, who are actually our existing customers, have been able to give them top up loans, because we now understand that yes, their FOIR has actually improved, or maybe their salary has increased, or maybe they've completed their obligations. So we have been able to give customers top-up loans who also have good acceptance by the customer. So overall, your repeat disbursements actually increases. So it's basically the CLI offer, credit limit increase offer, that you actually end up giving to your customers. So that is also a significant business impact that we have been able to identify. What we are trying to experiment, uh, because we are working on such services right now in terms of our own capabilities, looking at creating out early warning signals in terms of significant FOIR changes happening in of the customer compared to when the decision was made in terms of underwriting, or whether the customer has done a bounce in any other with any other lender, and like bureau will report that much later, and we will be able to get that information much earlier through the account aggregator. So that is also a thing that we have kind of seen. So I think these are few things like representation, top-up loans that we are able to offer, and experimentations on the early warning signals. And these are some experimentations that have been worked out and are in the process. So I'm sure that other people who are here would also have would be able to share more ideas on these things.
Okay. So I think top-ups are something which is kosher, and I think you are talking about maybe coming from credit bureau appraisal and then customer taking a loan and you are taking the consent again. Anyways, but I think we are running out of time, and we'll
Okay.
surely if you can just help us with any impact numbers if you have handy, or if you are willing to share, it is
Uh,
something that
I think
any
yeah.
A so portfolios versus non-A, etc.
Okay. So I think one like the number that I was actually talking about, I'll talk about some backtest results that we have done based on the data that we have seen. As a lender of our ticket size, we do closer to a 50K ticket size. Majority of that is our segment of the population. The first loan is around that ticket size. And without account aggregator, or with maybe whatever services we used to have earlier in terms of PDF net banking, we used to have, I would say, 60-70% of the cases going into the non-straight through pass journey, because there was a no bureau hit, or they were thin on bureau, or maybe we were not able to assess the FOIR very well. So we have now been able to move to more than 60%, and with some intervention going on, I'm sure that in next 2-3 months we will be able to achieve an STP of STP in terms of banking plus bureau, getting to a number which is closer to 90% in an STP way. So that is the number that we are looking at. That is the operational efficiency bit of it that I can talk about. So we have been, like in a 6 month period, we have actually grown from closer to 30% to going to be 90% in terms of complete STP journey. In terms of portfolio related performance, the pre-portfolio without banking and the verified banking that we are able to get, and not just one particular bank, but a view of across multiple banks, we have what we were seeing approval rate of around 10% approximately, and say a bad rate of X%. We are able to maintain a similar bad rate, but almost like more than double of the approval rate, actually more than double of that. So
you're saying out of 100, you were able to do 10%. Now it is 20% approval rate from lead to
20-25%, 20 to 25% of approval rate, maintaining the same bad rate.
Okay.
Yeah.
Great. I think these numbers are very encouraging, and we will really want to see this number.
I think the capability, so account aggregator gives you another dimension, but after that, I think it is left on the capability of the FIU, like the lenders in this case, to actually meaningfully use that data. Now you can use that data to actually build your own dashboards and then have an underwriter approve it, which will become very similar. It will not really change the approval rates. You will have to, or maybe not significantly improve the operational efficiency also. Then the next iteration could be, how do you actually make relevant rules to actually eliminate and then bring in more operational efficiency, and also do more STP in terms of banking. I think that the another iteration on that would become, how do you actually build more intelligent models, affluence, income, stability. Those models actually bring in significant edge, and your FOIR becomes more verified, and instead of an income surrogate, you get the real income stability and real income numbers. With that information with you, you are able to take a higher ATS calls, you are able to approve more customers, even NTC. These are things that would show a significant impact in terms of every lender's portfolio.
Great. I think thanks, Anubhav, for sharing your views and your experience with Account Aggregator. And these are very encouraging numbers, which we also feel while interacting and with ecosystem also scaling up and stabilizing. I'm sure that we'll have a much better, efficient loan journeys using this data. And we are also looking at how cross-sectoral data will be used by lenders apart from banking, how GSG and data can be used is something which we are vouching. So now with this, I'll open up the forum for the question and answer. Ravi, can you mute yourself? Yeah. So if you have any questions, we have to take it right now, and then maybe, or Ruchi, as you suggest, we'll take it afterwards.
We are ready to take a couple of questions right now. If anybody has any questions for Anubhav.
Yeah. So anybody who has any query on his experience or on how Stashfin is using Account Aggregator, or any question related to AA which you want to ask, feel free to raise your hand and we are happy to answer them.
Hi. Hi, Abhishek. Am I audible?
Yeah.
Yes, Nabil.
So, hi, Anubhav. I'm Nabil. And we are one of the users who use Account Aggregator for both NTC and bureau customers for both underwriting and loan monitoring purposes. So, Anubhav, as you said that the approval rates have increased, right, once you started using Account Aggregator. The question here is, how did you guys control the drop-offs?
Okay, so okay, very good question, and I really enjoy asking this. This is a completely a product and digital product kind of a question. So when you actually add the account aggregator so I think it is optimization of the journey. How do you actually get the customers to do that? it's significantly dependent on what is the value proposition that you actually tell the customer first of all. So you have to tell the customer that why you are actually asking for that additional step perhaps. And once you actually do that very well, and I think the reasons are quite clear, you are actually going to offer a better rate, a better offer eventually. It could be lower rate of interest or a higher loan amount, eventually better EMI, for example, thinking of a personal loan. So you are actually able to give a customer a better offer, and that makes the pitch very clear that if you do this, this is your advantage that you actually get offered it. Now, when the customer kind of does that journey, I think with certain best practices that you can follow in terms of OTP, how to actually share the portfolio, or how do you share the consent in a clear way, and how do you read the OTP? If the customer really drops off, then how do you retarget them? So if you actually follow the best practices, you are able to achieve 90% conversion. That is a number that we have been able to hit. 90% conversion in terms of the customer getting in and then actually being able to share the consent successfully, so that we can actually underwrite on the banking data also. So I like look at the number in terms of what we have been able to achieve, so that you guys can actually have a target at your, and I'm sure some people would be able to actually achieve more also. We are also on the same journey to actually get better. I think 70% is a number that you will be able to achieve quite easily, and then 70 to 90 is something that you'll do with better practices, optimizations in terms of retargeting, getting the customer communicated. And this is all, so we don't do assisted zero, like we do zero assisted. So this is all digital.
Got it. So basically, making the journey simple, and again, recontacting the customer if you see any drop-ups.
Yes, but like what I'm telling you is completely digital. There's no human assistance involved here. So these are technical interventions or product interventions that you do, digital interventions basically, that you do as part of your journey, customer communication, and you should be able to achieve that number.
Got it. Thank you so much.
So anybody else, or we can move on to our first TSP spotlight. So these are very interesting session we have carved out. We have reviewed the product as well, and these are how companies, lenders are using collection and monitoring uh, use cases through dashboards and products built by tech providers. I'll request you to stick on till the end, and we have just half an hour. Both we have given to the two TSPs. Yeah, Ruchi, I think you can
Thank
take.
you. Yeah, thank you, Anubhav. Before we move on to the next session, which Abhishek has briefly explained to you all also, thank you so much, Anubhav, for sharing your experience with us. And like Abhishek said, that the numbers are very encouraging to people who are yet to adopt it to the extent that they should adopt the framework, and also to show how people are making a difference to the business and to their consumers using a digital consented framework like Account Aggregator. Thank you once again, and if possible, please stay on till the rest of the session in case there are any questions that come by the end of it. Thank you.
Thank you.
Okay, I would now like to move on to the next part of this Pragati web series on correction and risk mitigation in the lending industry. This time, what we have done is slightly different. Every time we look out for technology providers, every time we have a Pragati series, a topical Pragati series, we look out for technology providers who provide services in that particular industry that we're covering, and then there is a certain process that we follow and get them to invite them to present their solution. This time also we've done something similar. However, we wanted technology providers who create solutions specific to collections and risk mitigation with the lending industry. So after getting submissions from technology partners, we've actually gone through each of them to see if the audience who are sitting through this session will have a takeaway from the what technology these companies are providing. So will they have something which will be a learning, or would it actually lead to some kind of a call to action? So we have two technology providers who have created a solution for this industry on collections and risk mitigation. And we'll start with the first one. The first one is Finarkein Analytics. They've been in the account aggregator ecosystem for a long time, and they've been creating solutions across the spectrum for various financial sectors. I would like to invite the team Finarkein. I believe Kunal Herwar is present here from team Finarkein. Kunal, will you please start your video?
Hey, hi Ruchi. Sorry everyone, I don't have my camera available, but hopefully you can just endure with my voice.
Great. So Kunal, I give you the stage forward. Please share your presentation with the audience here and tell them what is it that you have for this industry on collections and risk mitigation.
Sure. Thank you, Ruchi. Is my screen visible to everyone?
Yes, it is.
Okay. So, hi everyone. I'm Kunal. I look after the lending side at Finarkein. We've been in the AI ecosystem for about 6 years now. Started off as one of the earliest TSPs. We've been doing some interesting work in the insurance space, but we have a large presence in the lending space as well, especially in the credit card and personal loans domain. We created a few. We were the ones who created the first product on the loan collections piece for one of our existing customers, and I take you through the case study about how we identified this problem, how our solution has helped them solve the problem, and how the solution has scaled since then as we move to other customers, other use cases, etc. So I'll just give a brief intro to the problem statement here. One of our largest customers, they're an NBFC. They do 1 million plus loans in the PL, gold loan, consumer durable space. Uh, they have a very high natch failure rate. So as you know, natch failure rates, if you look at the official NPCI stats, also vary between 25 to 35% on a month-on-month basis. Now, primary reason for all of these failures, if you look at a breakdown from a typical payment gateway, they'll tell you about 1% is technical failures and about 24 to 34% is usually because of a natch bounce. There is no balance available in the customer's account. Now, lenders, how they've typically handled this so far is they do multiple presentations of the same natch mandate, trying to predict what is a date on which the Nash mandate will be successful. NPCI allows you to do 3 presentations in a month for a particular mandate, and those presentations are typically done on fixed dates. So as you can see in this case, the lender was doing it on the 3rd, 9th, and 11th of each month, and after that, their telecalling teams would start engaging with the customer, and they'll start and figuring out what to do in terms of we get the
Kunal, we
money
lost you.
back on field ground on field. What we did for them was slightly different. Sorry, where did I cut off?
There's some bit for 10 seconds, your voice was gone. So,
Okay, sure. So as I was saying, the lender typically used to do collections by presenting the natch mandates on specific dates. So everything that's due for collections in the month, they'll present it on the 3rd of the month. And then for the ones that failed, they'll represent them on the 9th of the month, and then subsequently the ones that failed after that on the 11th of the month. After that, they'll engage with the borrower through the telecalling and on-field collection efforts, trying to recover the due balance. What we did for them was we created a rule engine which was sitting in between their LMS and their payment gateway integration. What it basically did was figured out, okay, all of these, there are these 100 EMIs that are due for this month. We'll check the balance for these accounts, and we'll identify what's the optimal time to present the natch. So between 3rd and 20th of the month, we were just monitoring the balance of the accounts. And so what we started doing for the borrower here was we let them present the natch as they were doing on the third of each month. And subsequent to that, once we got the list of the natches that had bounced, we started monitoring those specific accounts, started checking the balance on these accounts on a daily basis. And on whatever date the balance was sufficient, we started presenting the natch mandate. We did this from the 3rd of the month till the 20th of the month. After that, what we would do is we'd give them a list of all the mandates that have failed, and they would then engage the telecalling and customer support based recovery methods. What this did for them was that absolute touch failure percentage went down drastically. It went down by 11% for them. Overall success rates improved, the cost of collections went down. But what it also did was that the operational effort that they were putting in went down drastically, because before they were engaging the borrower, the field agents, for 20 days in a month, the telecalling and field agent teams. Now they're only doing it for 8 to 10 days in a month. So this is a this is our Smart Collect product that we've now built on top of the same use case and the case study that we identified here. What this basically does is it sits between your LMS and your PG. It has its own rule engine. It connects to the underwriting data that was collected at the time of loan underwriting. It monitors the customer's accounts on a recurring basis, identifies customer spending habits, balance patterns, what date the salary comes in, etc., and identifies optimal times at which the loan collection can be initiated. This now comes pre-integrated with a couple of payment gateways, and we've also been using the open APIs of payment gateways and building end-to-end stacks here. So anybody who's not started doing loan collections yet doesn't need to alter their current journeys or figure out a way to implement loan collections consent in the existing journeys. We've built a consistent journey of this for this, along with some of the payment aggregators, where we build a consistent UI on top of the payment aggregator journey, through which the collection consent can be taken. It's typically done through a single page consent, because a lot of the information that is required for the collections consent is already captured during the NACH mandate registration stage. Yeah, so here are some brief stats about the impact that we've had so far. We have 4 large NBFCs that are currently using our product. D0 collections have been at 93%. DPD30 have been at 99%, and overall launch cost across the board, we've seen a drop in for about 12%. So here's a brief demo of what I was mentioning about how our system integrates with existing PG systems. In case somebody wants to check it out, just drop me an email. I'll send across the entire demo. What this basically does is it connects to your existing NACH registration workflow. Nothing changes for you. The consent for the loan collections is captured at the end of the NACH registration workflow. So here's a brief about what kind of insights our product is able to provide right now. Current balance in the next 2 days, balance in the next 5 days. What's the success rate of an EMI debit? So what's the prediction of an EMI debit if you're doing the presentation right away? Also, we enable lenders to collect partial EMIs. So if the EMI amount is 10,000, we can inform the lender that, hey, for this month the borrower only has 6,000 available. Would you like to collect the 6,000 now and collect the fourth charge additional interest on the remaining 4,000, etc. This allows the lender also some flexibility, where it's not a 0 or 1 situation where it's a successful debit, so the entire amount comes. But even if one rupee is missing in that, the entire amount fails. And we've also now started doing loan monitoring on top of along with the collections use case. What we've done here is we've picked up some of the very interesting, very important rules that RBI has issued in its early warning system circular. Things such as delayed payments, things such as covenant breach or end use of the loan, etc. And what we've done is we've identified metrics and parameters through which beyond which a certain activity, when identified, can lead to a much higher risk of default or a risk on a portfolio level. So using this, what we do is we generate these alerts for the entire loan book, and for specific alerts, we inform those specific systems that you need to engage. For example, so a particular borrower has started doing F&O trading with the personal loan that they got. Now, what this means is that the borrower is has a much higher likelihood of a default in the future, even if it's not immediate. So, what we do is we inform the operations team that, hey, this is a borrower that's likely to default. So you need to give them more nudges and reminders that okay, your EMI is due and on this particular date. We also have similar alerts for if a borrower has taken an additional loan. That information goes back and gets fed into the existing systems where they can take more decisions about what kind of a upgrade offer or a new product offering can be provided to this particular borrower to ensure that the overall health of the borrower's finances remains intact. So this is a case study about how one of our largest customers has started using the loan monitoring product. We do a monthly profile refresh for them. All the customers that have a high risk of default, we do a weekly refresh and identify what are the mitigating steps that can be taken to ensure that the minimum amount due at least on the credit card is paid on time. For the ones that have a low risk, we see, okay, is there a new offer that the customer can be issued? Is there a new upgrade of opportunity for this customer to a better card? Is there a new voucher that we can issue to the customer who is very likely is going to make the payment, but you want them to keep continuing to use the credit card? And for the ones that have gone dormant, we are able to create very hyper personalized nudges here. So I'll give you a very interesting example of this. Let's say you as a customer have a tendency to spend on groceries on Big Basket. The credit card issuer here, what they do is they say, okay, we see you spend money on Big Basket. Here's a voucher for 10% discount on groceries on Big Basket. So these kind of hyper personalized nudges, hyper personalized product offerings that we're able to now provide to the user based on what we are able to see, how the user is using the card, how the user is spending money, and ensure that the user is having a great experience in the overall journey. So yes, that's all from me. Happy to take any questions.
Hi, Kunal.
Hi, Jaydeep.
Hi. Just want to know how do you monitor the bank statement as well as the that trading that you have mentioned FNO and do the monitoring?
There is the FNO data is not available in Account Aggregator, but there are a few techniques that you can use to identify high likelihood of FNO activity. We can connect separately. I'll explain to you how this works. It's not direct correlation. But there is a model that you can create to predict this.
Okay. And apart from that, do we have the functionality of the monitoring statement that I can have statement of the borrower on monthly basis or quarterly basis after
Yes,
dispersal of the loan?
yes. As per the Sehmati's fair use templates, loan monitoring is allowed for up to 5 times a month, where we can fetch up to 6 months of data, if I'm not wrong.
Okay. And if I take one-time consent at the time of dispersal or login of the loan, then for how much month or how many months it will remain valid, that consent?
The consent is a one-time consent. So once the customer has approved the consent, it's not valid anymore. Now
Okay.
you've received the data, right? So after that, the consent is utilized. But you can take recurring consents, which are coterminous with the duration of the loan.
Okay. Okay.
Actually, Jaydeep, sorry. So during the time when you take the consent, you can define the consent time period. So during the loan monitoring, you don't have to take consent again. You can use the same consent and fetch the data periodically.
Oh, nice. Yeah, that is what I was looking for.
You can do that. You can do that.
Yeah,
In
that's available.
Account Aggregator.
Okay. Okay. Yeah. Thanks.
Hi Kunal, Seema here.
Yeah, hi, Seema.
Yeah, so the great initiative and very useful case study you have explained. So will this information come in the single API response or I need to hit for a separate use case? Like if I want to know ki my customer is looking out for the loan and whether his bank account is decreasing. So for this too, I need to hit two APIs or in the single API I get the data?
No. So our system is a single system. What we do is we can provide alerts and insights into specific systems. So think of it as a push notification that comes
Okay.
to your system rather than a pull that you're doing from our system. So we are monitoring. Our system sits on a dedicated instance for an FIU, and it identifies the situations. And when these situations come, it tells a particular system that, hey, this is a push notification. Sends a push
So this is a
notification.
webhook.
Yeah, it's a webhook. It publishes a webhook. It publishes information on a webhook.
Okay. So as on today, if I'm not wrong, if my customer provided the OTP, okay, and if suppose in Kotak there is some issue going on, so as on today, I'm not getting any response in the API that there is issue at Kotak, and I need to wait for the next day, download that daily report, and there I need to check for the reason. So is this also in the pipeline that you will provide the response in?
So, are you mentioning if the data fetch from Kotak has failed, and in that case, you're asking how
Yes,
that
correct.
works, or in the
Yeah.
recurring scenario?
No, in the data fetch.
No. In the data fetch, our systems provide a very clear indication what FIP has failed, what data has come, what data has not come. In case something has failed, why is it has failed? We will give you the exact error code that we receive from the account aggregators.
Okay. Okay.
And
I'll
you
check
get it
that.
as part of the API response itself, real time. You don't have to wait 24 hours or anything for this.
Okay, but currently we are not receiving. We'll take this separately.
Yeah, we can connect separately, and we can
Yeah,
figure out
sure.
how we can help you with this.
Okay, thank you.
I'll just drop my email ID in the chat, and please feel free to drop me an email. We can connect separately.
Okay, sure. Thank you.
Anyone else has any questions right now? Or should we move to the next session? Okay, I think anyway, Kunal has sent his email ID. Kunal, where have you typed the email ID though? Okay.
I've just typed in the chat.
So please feel free to reach out to Kunal for any queries around their product. Thank you so much, Kunal, for your time and for
Thank you,
also
Ruchi.
answering all the queries patiently. Thank you. With that, we move on to our next presentation. The next presentation is by another technology service provider who has been in the ecosystem almost right from the beginning. It's called Ignosis. I would request Team Ignosis. I believe Yash Surana is going to present here from Team Ignosis. Yash, could you please, come online and start your video? So Ignosis also has an interesting product demonstration to do along with some more information that they would like to share. They have also gone through, the due diligence that they had to from us to see if their product is going to be a right fitment for today's presentation. Yash, are you here already?
Yeah, I'm here. I'll just start on my video as well.
Yes. Perfect. Okay. So over to you, Yash. Please share your screen and carry on with the presentation.
Sure. Thank you. I hope the screen is visible.
Yes, it is.
Okay. So I think Kunal in the previous presentation has literally covered what the actual problem is. So I'll for the sake of saving time, I'll just jump to the problem statement that we have in front of us, which is collections. A lot of times in the industry, what has happened is that while the entire underwriting process has been digitized, there is little that has happened on the collection side, especially with account aggregator into the picture. I think there is a lot of scope that is there, and a lot can be improved. So a few problems that we've highlighted working, or that we've seen working with a lot of clients, is increased ENASH failure rates. I think there is a circular also by NPCI which charges you certain penalty if in case your success rates are not greater than are not greater than 50% for the mandate that you hit on the client while you're collecting. When you do a blind debit. So yeah, that there is a recurring failure risk, then you only get to try a limited number of times, that you only get to try thrice in a month. So that itself is a burden on the lenders, where you could not present more than twice, and so the scope for the collection that itself gets reduced. And then there is also a confirmation delay, on the side of uh, whether the eNash was a success or a failure. To sort of solve for all of these issues, we have our own collections intelligent collection solution, which works two pronged actually. One is, during the underwriting, when you're trying to onboard the customer during the underwriting, what our analytics tells the lender is that, what is the peak balance date on which the collection should be ideally be initiated. That could either be the salary date or the date on which he's receiving some recurring source of income on a regular basis. And what we also do is, we sort of help the lenders, collect the amount, also monitor and collect the amount post dispersal. Basically, once there has been a DPD in the customer's account, what is it that we do is something that is available on the screens, that we do balance check before the EMIs, DPD accounts and smart monitoring. We've enabled automated notifications, such that you could go ahead and present the NASH the exact moment when we intimate you to, and smarter management for failed presentations, where we know where there has been a failed presentation. The our intelligent collection solution sort of understands from the historic data of when there has been balance in his account, and then we suggest the presentations accordingly. So these are a few screenshots of the solution that is sort of already live with our clients, where we are sort of helping them both on the monitoring as well as the collection side. I'll come to the monitoring piece later. I'll look at the collections problem first. Very simple basic solution of letting lenders upload the customer list. We also let you select the consent template, which is
Yes, sorry,
yeah.
I'm interfering between. I think I could only see your first slide. It's not you need to reshare it.
Oh, okay. Just a
I
second.
was thinking it was with me only. Yeah.
Thank you so much for it, Abhishek. I'll try sharing again. Is the screen visible? And I
Yeah.
hope
Yes,
You're not
you
slideshowed.
can put it on slideshow.
yeah, that is what I'm trying to do. Is the screen visible now, or is it still the first screen?
It is visible. We are on the intelligent collection solution.
Okay, perfect.
Yeah.
So here I was talking about how we could help you at two levels. One is at the underwriting level, where we are assisting you to understand what the peak balance date is, and once you've disbursed, we can help you two pronged. One is pre DPD and one is post DPD. Pre DPD, we could give you early signs of indication of when the customer is about to go bad, or there are signs of deterioration. And the second is, once he goes DPD, how is it that we help you collect the money back? Did the slide change right now, or is it still the same?
Does it change?
It changed, right? Perfect. Okay, these are a few screenshots that I was showing you of uh, the solution that we've already implemented with the clients, where we are helping them both monitor as well as collect the amounts. I'll directly jump to collections, where we have basic systems in place where we can help the customer upload lists which has fields like the name, email IDs, consent templates. What consent template do you want to execute? Then there is the execution time. And at the back end, what we also do is we run a FIP health check, where we sort of understanding what is the best time to collect, and then running the FI, running the fetches accordingly, such that we tell you the most refreshed balance. Okay. Our solution basically works on two ways. We will tell you on the collection fetches whether one, you should present the eNash or not, or second, what is the amount that you should be presenting it for. I mean, very simple. Where, for a few customers whom we see that there is no balance in their account, we would obviously suggest that you don't go ahead and present the mandate or the eNash. And for the clients where we see that there is balance in the account, we could actually tell you the amount that has to be presentable. Your EMI amount could be a lot higher. In the first case, like, your EMI amount could be 5,000, and the balance is 1,297. But as per our recommendation, you should only go ahead with 950, because there might be some other charges that may be there, or some other EMIs that are scheduled to go first before this. So all of this we sort of factor in when we are suggesting you an amount that you have to present at your end. So this could immediately help you decide whether you have to present the eNash, represent, and what amount you should present for. With this very simple process, we've been able to see uh, about overall 13% collection efficiency in all the three stages of DPD buckets, where our intelligent eNash across our clients have been able to suggest 59% efficiency, where blind eNash was doing only 40%, so an overall improvement of 20%, so on and so forth, we've been able to do across various stages with just this very simple process. And then there is obviously an intelligent engine that runs behind, which tells you the exact balance that could be there in the customer's account based on the latest refresh. And our FI fetch success rate here is close to greater than 90%. So the likelihood of you getting the exact amount and presenting it becomes a lot higher. Other than that, your the collection, so the case that I was exactly mentioning, that the collection efficiency improves. That, say for example, if the EMI was of 7,000 but the balance was only 6,500, we'll suggest you to go ahead and debit only 6,500 rather than going ahead and debiting the overall 7,000. And second one would be the eNash success rate. I mean, NPCI has put up a bar on the eNash success rates to be greater than 50%. Once we tell you exactly of how what amount you should be presenting, that sort of helps you on an overall level to maintain your success rate and avoid paying penalties. So this also, what this does is this increases the overall collections efficiencies, improves the eNash success rates, gets a better customer experience, where the operational level challenges at the back end, where you have to go behind the customers and collect the amount later, sort of reduces, because the overall amount you collect becomes a lot upfront. Then we also have proactive monitoring. In this proactive monitoring, we also sort of give you a stress score, which sort of we understand that there are 5 fetches available per month for lenders. We utilize them, and we could tell you whether a particular customer is about to be bad there. And we could present you with monitoring parameters, the ones that we've shown on screen, and a few behavioral indicators of how we think you should go about what the customer is about to what changes do we see in the customer profile, like unexpected financial pressure points, or potential diversion of funds, so on and so forth. Based on this, we compute a stress score. Using that stress score, we could tell you that and we could predict whether the balance on the EMI date is going to be sufficient or insufficient, and the status of it, whether it is at risk or at critical. Then you could take sufficient measures to sort of start collecting the amount. The monitoring itself has seen about 12% improvement in the overall exposure at default. There has been a 14% improvement in the roll rates, that is customers moving from one DPD bucket to another. There is seen a 14% improvement. 72% accuracy overall in terms of 90-day default prediction. So we could actually predict which customers are about to go default based on the behaviors that we've seen in the past. And we were able to reduce the loss provisions at least by 11% for a few of our clients. I'll directly jump to a case study right now where a lender was disbursed around 1,000 crores monthly, and the INASH failure success rates were just about to exceed, or were in a few cases also exceeding 50%. Fortunately, the lender was working with us, so we sort of got into the picture. We understood what the problem is. We started regular and close monitoring of the DPD accounts. With that, and we were able to tell the client when do you actually present the eNASH, or you make the representations. With very simple solutions implemented, we were able over the last 3 months we were able to improve the collections efficiencies by 50%. An absolute improvement from say 31% to 45%. The DPD is also reduced by 10% because we were able to identify early stress, and the overall operational costs reduced by around 8% due to all the other things, all the collections effort that they had to engage into. And what we also offer right now at the end of this is we could offer you a free pilot of doing collections, just monitoring your collections with us, checking it out of whether this is working for you or not. Fortunately, it has worked for a lot of lenders whom we are working with, and we could do a free pilot with you where you could I'll message my email in the chat. You could send me an email or send me a WhatsApp, and we could take it forward from there. So I think that was it. Any questions?
Yeah. Hi, Yash.
Hi. Sorry, I'm not able to see. Yeah.
Seema.
Yeah. So my question is, when we take the consent from the customer, we can fetch data 6 times or 5 times in a month, correct?
Yes.
And when you are saying it for the customers whose eNACH presentation is failed, for the next 20 days, daily you are going to give us the balance. Then how you're working that? Like daily you're
No, so
fetching the data.
there are two kinds of consents, Seema, here. One is the monitoring, which you take 5 times a
Okay.
month, and then there is another consent which is specifically for collections, which is I think CT0042 if I'm not wrong, or sorry, CT0035 if I'm not wrong. Which helps you once a day, which allows you to fetch the accounts once a day.
Okay, so for the old customer, I took the consent for while disbursing the loan for 5 times wala part. So again, I need to take this collection wala consent for same customers.
Ideally, yes.
Okay, and for the new customers, in the same consent only, this both we can ask, like he should
Yeah, we can
enter.
give checkbox. We can give checkboxes in the same consent where the customer, if he doesn't want to give any of the consents to
collections.
you, yeah.
Okay, that checkbox will be auto selected or
yes, it could be auto selected,
okay,
but the customer has a choice
No,
of
but
not.
I
okay,
think
okay.
so. Auto selection is something, Kosha, you should uh, refer to fair use guidelines, and we assume that customer should be given a choice to select the consent, and well, it should not be auto selected. It also comes under dark patterns.
I think Saurabh
Okay.
has a question.
Yeah, hi. Good afternoon. Just wanted to know one thing, like as you have mentioned, in 90 plus bucket DPD, you have a 4% additional hit rate. So in those category of 90 plus DPD customer, at what point of time you are taking those consent before presenting eNACH?
Sorry, didn't get your question correctly.
In your previous slide, you have mentioned for 90 plus DPD customer, your smart eNACH has 8% hit ratio as compared to 4% in blind eNACH. My question here is this: at what point of time you collect consent from 90 plus DPD customer?
When they are giving the loan, I mean, during the underwriting, I mean, when you are about to give the loan, that is where we sort of take the consent from the customers.
Okay, so but let's say that, I mean, if the lender has not taken the consent, so can this framework be applicable or not?
In that case, Saurabh, you have to sort of take the consent again, find a way to incentivize the customer to be able to give you that consent. And if he gives you the consent only, then you can go ahead and do it.
Sure. Thanks for your response.
Okay, any other questions for now? Okay. Yash, would you like to share your email ID on this chat box with everybody? So
Yeah,
if there are any questions, yes.
रुचि एक बार आप मेंबरशिप के लिए भी रिक्वेस्ट करोगे क्या?
Yes. So while Yash shares his email ID, and please reach out to Ignosis if you have any questions around the solutions that they have provided. We would like to take this opportunity with all 50 people who are sitting here to inform you all that we have initiated the Sehmati membership program. So up until now, regulated entities did not have any structural arrangement with Sehmati for all the services that we were providing. With Sehmati membership program, we create a structure in this cross-sectoral ecosystem, which in a way binds every ecosystem participant with a set list of rules, a set list of regulations, best practices, service levels amongst one another, amongst the rest of the ecosystem. There has been an email that has been sent to all regulated entities. By regulated entities, I mean FIPs, FIUs, and account aggregators on being part of the Sehmati membership program. This was sent on 2nd of April, after which we've had a lot of discussions with most of the live entities. For those of you who do not know about the membership program, I'm leaving a few links over here on how you can become a member, what are the information that you should know, and we would also be very happy to have any one-to-one discussions with y'all if y'all need any further clarification. To become a member, please click on this link and fill up the form, after which our team will reach out to you with the list of next steps. Please note, amongst everything, all the benefits that members of Sehmati and the ecosystem have also includes the technical, the technical accesses that the ecosystem members have, because currently it's hosted by Sehmati. So, it is the benefits also include those technical access. If there is any question anybody has on top of your head right now, I'll be happy to take it. Otherwise, our email ID is mentioned over here. Y'all also have our personal email IDs. Please feel free to reach out to us.
Ruchi, if I can go about this question.
Yes, please.
So this membership program is like on top of what we existingly get. What is the mode for us to be a member? Like,
so yes,
as an AA, we are already there. So yeah, what's the mode for becoming a member?
Akash, I'm not sure which entity are you from.
I'm from
sorry.
CAMS.
CAMS. Okay. So CAMS is already in discussion, and we all are, of course, members of the ecosystem already. And as Sehmati members, like I said, the membership basically what it does, Akash, is today everybody is Sehmati is a voluntary organization where we basically are industry alliance today. And today, the central registry is hosted by us, and everybody is following due diligence, etc. There are certain guardrails that have been introduced. However, it is not bound by any specific service levels. Having a membership with the Industry Alliance helps you to get into a structured arrangement. This arrangement helps you not just with having access to the technical services that I had mentioned over here before, like central registry and token issuance, but it also allows you to have certain bare minimum standards of services that you can expect from FIPs and from FIUs and other account aggregators. So this is what Akash's membership will do. Is it happening today? Yes, it is happening today. However, what we are doing is, well, like I said, we are trying to ring fence the entire process and bring in a certain decorum to how the ecosystem functions. And this is what will allow scalability of the ecosystem as it grows forward. So we have come to 600 entities in a very voluntary way of functioning. And from 600 to 6,000 will need certain structure. And that is why we've introduced the membership program. The membership program was in heels for quite some time. We were in the process of designing and drafting this program for quite some time. It happens to coincide with the SRO application that RBI has released and for NBFC AA. And Sehmati will, of course, apply for NBFC AA SRO. And one of the prerequisites for application is to have a certain minimum number of regulated entities as our members. So both of these kind of coincide together. And that is why membership, it's important for all regulated entities to come onto the membership program.
Yeah, thanks, understood.
Having said that, Akash, let me tell you, CAMS is already applied and, there's
I just wanted to know what are the benefits we get out of
Sure. I believe somebody else had also intermittently raised hand, Saurabh, I believe. Okay, maybe it happened by mistake. So I have written the email address, linked, put some of the links which we believe you all should check if you want to know more about membership. If not now, you will eventually definitely be reached out by your account aggregator technology provider around Sehmati membership and by Sehmati itself. Reach out to us. We've put the email ID as well, and anything else, please feel free to connect with us. Any questions whatsoever, please contact us. Okay, I think with that we come to the thank you so much, Abhishek. With that we come to the end of this Pragati session. Hope this was useful for all of y'all. If y'all have any questions around Anubhav's session, fireside chat, Kunal's session, or Yash's session, please you may reach out to us or Kunal and Yash independently. If you have any, if you need to do any brainstorming or further discussion around use cases on collections and risk mitigation, we all at Sehmati are always available to, have a dialogue with y'all. Our email IDs are mentioned here, and I think that brings us to the end of this session. Thank you so much, everyone, for being a great audience. We will do this again next month with a new topic and new presenters and new guest of honor. Thank you. Thank you very much.
Ruchi, I had one more question before we can end. We would be receiving the link to this, the recording, right? The recording of the session.
Yes. So every Pragati session, we don't send an email, Akash, actually. Every Pragati session gets updated as a blog on our website with a link to this presentation and the entire video, which is also, you can independently look at the video on our YouTube channel.
Okay, thank you.
Yeah, okay. All right. Thank you so much, everyone. Thank you very much.